With this strategy, you can achieve the highest return for the year and the right trade with these 3 pure steps. If you practice more, you can achieve a positive return. The 3 Smoothed Moving Average, SMA, is a technical analysis indicator used in financial markets to analyze price trends. It is calculated by taking the average of the closing prices over the past 3 periods, with each period weighted according to a smoothing factor. The smoothing factor assigns more weight to recent prices, making the indicator more responsive to recent market movements. To calculate the 3 SMA, you would first determine the closing prices for the last 3 periods. Then, you assign weights to each of these prices. The weights typically follow a pattern where the most recent period has the highest weight, the second most recent period has a slightly lower weight, and the oldest period has the lowest weight. Here's an example calculation. Period 1, closing price, $10. Period 2, closing price, pound 12 out of period 3. Closing price, 11. To calculate the 3 SMA, you would apply the appropriate weights. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. You can trade more easily with this style. Any style is good, but it doesn't matter if you use it momentum candle. Momentum candles are powerful market candles that show us that the power is in the hands of the group of buyers or sellers. And a candle is called a momentum candle if its body is larger than the sum of its shadows. The bigger this body is compared to the shadows, the stronger the momentum candle is. A candle that has no shadow is the strongest type of momentum candle. Based on the color of the candle, you can tell which group has the power. The red momentum candle is the power of the sellers, and the green momentum candle is the power of the buyers. Base candle. In base candles, the body of the candle is smaller than the sum of the shadows, and it shows that buyers and sellers are fighting with each other, and it does not specify which group has the power. In base candles, the color of the candle is not important, and it does not determine which group's hand is strong. The distance between high and low in a candle is called the range of a candle, which causes the candles to be divided into 2 modes, ERC and NRC. If the distance is small, it is called a narrow range candle, and if the distance is long, it is called an extended range candle. Support and resistance, SR. When the price reaches a level to which it reacts and moves against its current direction, it is called support and resistance. SR is support and resistance. In RTM, both are called SR. If the price changes direction once, SR will be of minor type, and if it changes direction more than once in that area, SR will be of major type. Contrary to classical technical, no matter how much the price reacts to a support and resistance, its resistance support will be stronger. In RTM, the more the price reacts to SR areas, the more likely it is to break those areas next time. At every resistance, there is a queue of sellers, and at every support, there is a queue of buyers. For example, when the price reaches the resistance, the sellers sell and the price goes down. Now, if the buyers buy for the second time and the price reaches the resistance, this time there are fewer sellers than the first time at the resistance. The number of orders sales will decrease. In this way, every time the resistance is tested, the number of sellers becomes less and less and eventually runs out, and as a result, the resistance is broken and the price increases. When an SR is broken, its role changes. If it is support, it turns into resistance, and if it is resistance, it turns into support, which is called a SR flip. Identify the possible end of the process. The price in its path, as long as it has higher floors, means an upward trend, and when the price breaks its last floor downwards, it is a sign of the possible end of the trend. As long as the price forms lower ceilings, it means a downward trend, and the downward trend can reach its possible end when the price reaches its last ceiling, break to the top, and increase. Always remember that when the price breaks an area, that area has weakened or lost its strength and will not be filled with any more volume. So when it comes back, whales should fake fill that area. And whenever it comes to that side again, trap the traders and collect all the stops at that level. When it breaks, never be in a hurry. Wait for it to break completely and make a pullback to see if it will form a chotch or not. Be well. This technique changes its settings and goes from high to low from 9, 14, and 50. Well, whenever the price reaches its important range, It must go through a liquidation or a hunting stop when the price of the value goes up or down with high volume. When the price, for example, forms an important support and the price reaches the support area, the first thing to do is to wait until that area loses its credibility or is a stop hunt and moves to the next process. If not, it will continue to move. Well, when it continues to move, at least a pullback should be formed to collect the other stops. Then we know that this indicator always takes help from the price and moves with the price. Here are two options. You have to wait until our last ceiling is hit, so that the trend changes or the movement continues and the last ceiling breaks, and whenever the price comes to that pullback area, EMA 9 and EMA 14 are also below 9 and support each other. Cord and EMA 50 also help them from below that the price pullback rate should not exceed 50. If it doesn't, then the trend has completely changed, and at that time we enter the buy position after seeing the confirmation candle and also put the stop down in the order block. PIs are also based on every encounter with the previous trend line. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.